welcome to this Friday's edition of the Money Show. I'm Nantara Rai. I'll be with you for the next 30 minutes. This is the only show of its kind in all of India. One aim in mind, to help you get richer. Every day we get a new financial expert to answer all of our viewer queries, which you can send to us either by email or you can tweet us. You can also write to us on Facebook, or just be old-fashioned and pick up the phone and give us a phone call. The numbers will be on your screen. Incidentally, you can call in live during the show and we will get the expert of the day to answer your queries. The expert that we have today in our studios is Harshvardhan Roongta. I'm going to call him the Santa Claus in our studios. He'll have the ideas to help you get richer. Thanks so much for joining us here. Before I get down to it, I'm going to give you a chance to come up with 3 New Year resolutions all of our viewers must adopt.
So, well, Nantara, as you rightly said, we are in the mood for Christmas and the New Year. Well, it's important that we understand that 2019 is not probably going to be as good as it has been in 2018 for investors. There is going to be volatility owing to the elections that we are going to be facing. So, well, SIP remains your magic wand. I mean, if in case you're investing in equities, well, stick to the concept of SIPs. Understand that you're doing a systematic investment plan because you do not know which side the market will go. So that's the scenario we're looking at 2019. We don't know what the markets are going to do and how they're going to behave. So continue with your SIPs. Do not discontinue them looking at the volatility. So that's the first element. The second element is that you will need to understand that irrespective of however good an asset class looks, you will not go overweight and you will not invest all your money in it. We've heard this ever since we were in school. Do not put all your eggs in one basket. So that rule is going to be applicable to investors as well. Stick to that rule that you will invest in different assets as per your needs and your requirements. So asset allocation is again going to be reinforced in the year 2019 because you will see different asset classes behave differently given the market volatility. The third element would be, of course, do not lose focus. So what do we mean when we say do not lose focus? There could be one approach of investing which is, okay, I have some money left with me, I'm going to set it aside, I'm going to let it invest, let it just lie around, let it invest in a particular product, looking at the merits of the product. Well, we forget to analyze why are we investing into a particular product, what are our needs, what is that particular product going to help us do. So the focus clearly should be setting up a definitive goal. How far is that goal? What is the time horizon? How much risk can you take? Which is the product that helps you reach that final goal? You'll have to keep that focus in mind and then create a portfolio. Do not look at a product and then derive a need around it. Analyze and determine your needs and then search for the appropriate product. So these are 3 things that I would recommend for investors going into 2019.
Okay, that's the 3 top tips coming in for all of you to get richer and keep your money protected as well in the new year. So let's get straight down to it. The USP behind the show is to connect all of you, the viewers, with a financial expert. A quick reminder to all of you, you can email us, write to us on Facebook, you can even use Twitter, or just pick up the phone and give us a call on the number on your screens. I'm going to address the first viewer query that we're getting in. It's via email from Prashant, who had written to us saying, I've been investing 24,000 rupees monthly in mutual funds over the last 1 year. I want to continue doing the same for the next 7 to 10 years. Please suggest from the below portfolio if any churn is required concerning switching any funds or reducing the number of funds. So what he's told us, we've given the list to Harshvardhan Roongta already. It's going to come up for you on your screens as well. It includes Quantum Long-Term Equity, HDFC Balance Fund, HDFC Mid-Cap Opportunities, Mirai Asset Emerging Blue Chip, MOSL Focus 35, SBI Blue Chip, ICICI Pru. So, as you started by saying, don't put all your eggs in one basket. This viewer is certainly already not doing that.
Well, yes, Nantara, but what we mean essentially by when we say that you do not put all your eggs in one basket is that you need to pick up different asset classes. So while we see the query over here is more focused towards and completely concentrated into equity schemes, what was the reference is that you need to have some bit of your money in equities and also some bit in debt. So so that kind of diversification is what we're looking at, and asset allocation is what the reference is. So well, if you look at strictly towards the kind of query that he's been investing since about a year now, and he needs to continue investing for the next 6 or 7 years. So well, not going specifically into the list of schemes that he has, there is clearly a need to prune that a little bit. However, what I would recommend is that analyze how much money would go into large caps, how much will go into mid caps, how much will go into multi caps, and then within that category just pick almost about a one scheme in that particular category. So in that context, he has a whole lot of schemes in his portfolio which needs to be pruned a little bit.
Okay, so that's I hope good enough for you, Prashant. And if you have any more queries, you can always write back to us with more explanation that you might need, or any follow-ups that you may have. I'm going to move on to the next queries coming in from Damodran, who writes, I'm 31 and have been investing in mutual funds via both SIPs and lump sums from 2015. My objective is to amass wealth for retirement. Time horizon is 15 years. I'm currently investing 50,000 rupees via SIP in following schemes. The schemes will come up for you on your screens. We provided them already to Harshvardhan as well. He wants the financial expert to review and know if he should be making any changes. That's the portfolio of our viewer Damodran on our screens. Harshvardhan, we've already provided it to you. What do you make of his portfolio? Do you think he needs to make any changes?
So the first part is I'd like to comment upon the clarity of goal that he has and the discipline that he's been maintaining with his investments. He started investing in the year 2015 and he continues to do that right now, which is a very encouraging sign given the volatility that we see right now. So we've got many investors coming back and thinking whether they should continue with the SIP or no. So that was the first point that I mentioned. Irrespective of the volatility, please continue with your SIP, because that's exactly the reason you're doing an SIP and not investing as lump sum. So with that context, it's a good thing that I'd like to comment upon. Looking at his existing portfolio, there is an allocation towards multi-cap, large and mid-cap. So, the kind of allocation and the way he has split his money across different schemes is good enough. So, in that context, I don't think there's much to do over there. Normally, I just make a comment here. Normally, we do not recommend that you have two schemes of the same category, especially if your investment is just 4,000 rupees. But, given that, the small caps performance is highly dependent on how the fund manager actually picks up individual stocks. So in that context, he could continue with it. I don't see any reason for him to make any changes given where he is today. However, of course, I would recommend that given all his schemes are actively managed, he would need to review this portfolio once again after 1 year maybe.
Okay, so I do hope the viewer is satisfied. If not, write back to us. We will answer your follow-up question as well. Guys, you can also call us live. The numbers for you on your screens: 022 675 4974. We'll get Harshvardhan to answer your queries live right here on The Money Show. Till then, I'm going to take the next email query. Shamna Reddy, who says, I'm a housewife, age 52 years. I've shifted my FDs amounting to 25 lakhs into 4 debt MFs, that's mutual funds, in October 2017. From these three debt funds, I started investing in equity funds via the SCP route beginning Jan 1st, 2018. My investment horizon for equity funds is 9 to 11 years. My investment details are as follows, and she goes on to provide her portfolio, which we provided already to Harshvardhan Roongta, and it's going to come up for all of you viewers on your screens in case you also invest in these debt mutual funds or even the equity mutual funds, details of which are with us and on your screens. Harshvardhan, what do you make of her portfolio, her debt as well as her equity portfolio? It's a really long time horizon that she's talking about, especially when you look at the equity segment, 10 to 11 years.
Yeah, so if you evaluate the equity portfolio, there is one ELSS, one large and mid cap. The Invesco is actually a large and mid cap, and a dedicated mid cap fund. So the schemes by themselves again are good schemes. There is no need to make any changes there. However, I have an observation that she is investing in one ELSS scheme, which is a Franklin Tax Shield. So though the Franklin Tax Shield is a very good ELSS fund, if she does not require tax benefits under Section 80C, the limit is 1,50,000 rupees. So if she does not require that tax benefits, then there is no need for her to invest into an ELSS fund, because the amount that she is investing is locked in for 3 years. So in that context, if she does not require 80C benefits, then it's better that she invests in a non-ELSS scheme. I could recommend a scheme. She could go into the Franklin India Blue Chip Fund, and this is a large cap fund, and she does not have a dedicated large cap fund in her portfolio. So given that in mind, if she does not need, I'm just reiterating again, if she does not need tax benefits, then there is no point in investing in the Franklin Tax Shield Fund. In fact, it is better that she picks up the Franklin Blue Chip Fund. And in case she needs the tax benefits, then she can most certainly continue with the tax shield that she has in her portfolio.
Okay, so I do hope that helps you out, and some changes that you need to make in your portfolio according to Harshvardhan Roongta. Time for the next viewer query. This is from Shrikant C. He writes that I'm 45 years old, working at a software company as a recruitment professional. In my retirement age, I would like to be financially strong. I'm ready to invest in mutual funds. Please guide me which fund manager or which company should I choose, and would like to have at least 1.5 crores at the time of retirement. I think this is something, Harshvardhan, all of us in the private sector go through. It's not like we have government pension to rely on. It's literally what we do in our 30s, or 40s and 50s that we have to live off.
Absolutely, Nantara, you're right on this, that we need to plan for a retirement, and that has to be a very, very important goal in our lives. The reason being, whatever you earn today, there are times when we find our, it becomes difficult to manage our monthly expenditure out of the income that we're generating. Post-retirement, that income is not going to be there. So how do you manage your expenses? So yes, you need to plan for retirement, and this is one step towards it, that you think about it in advance and you build up a target and you start investing towards it. So Shrikant has about 10 to 15 years before he retires, and given that we're looking at a time horizon of 10 to 15 years at least, it's better that you invest in assets which have a potential to grow faster than inflation, or rather grow at a much better rate than what your cost of living goes up. So equities is the way to go, and if we extrapolate a return of about say 14% on investments done every month up to 15 years, he would need to invest 25,000 rupees a month. I could recommend a basket and a portfolio for him as well. He could invest 5,000 each in the following 5 schemes that I'm going to recommend: IDFC Nifty Fund, ICICI Value Discovery Fund, SBI Magnum Multicap, Canara Robeco Emerging Equity Fund, and Aditya Birla Sun Life Frontline Equity Fund. He can create a portfolio with 5,000 rupees being invested in each of these schemes, and then build a portfolio towards retirement. Review the portfolio after 2 years from now.
Okay, so there you go. That's what you need to do to ensure you have close to 1.5 crore rupees at the time of retirement. We're of course not told about the salary of this particular professional who is seems to be in the headhunting business. I tell you what, with that we're going to take a short commercial break. Stay tuned. You're watching this Friday's edition of the Money Show. Harshvardhan Roongta is like the Santa Claus that we've got in our studios. We'll be back after this break. Welcome back. You're watching this Friday's edition of the Money Show. I'm Nantara Rai. This is a show dedicated to help you all get richer and provide security for the future. Our Santa Claus and financial expert for the day today is Harshvardhan Roongta. Just a quick reminder for all of you, Times Network and the Association of Mutual Funds in India recently launched an initiative called Jan Nivesh. It's an investor education initiative that's getting people to pledge 1 day's income, just 1 day's income, into mutual funds for long-term benefits. You can also be a part of this movement. You can partner it and the growing economy, invest in mutual funds, join the Jan Nivesh movement. Give us a missed call on the number on your screen. It's a toll-free number 1-800, and pledge just 1 day's income and become richer and also have security for retirement. Incidentally, 10 lakh people have already been part of this initiative. Well, time now for the first viewer caller. Remember, our phone lines are open. You can call us during the span of this show, or you can just email us or write us on Facebook or Twitter. The number's on your screen right there for you. I'm going to go across to the first viewer who's dialed in, Shankar Sen from Andhra Pradesh. Good evening. How can we help you?
Namaste, madam. Madam, I have invested in 3 mutual funds. Hello?
Yes, carry on.
Madam, I have invested in 3 mutual funds. 3 mutual funds से हमने invest किया. My age is 35. I am looking for a 25 years long term benefits. I am invested in 3 mutual funds. 2 are multi-cap funds. एक है मेरा एसेट इंडिया इक्विटी मल्टी कैप फंड 5,000 रुपीज पर मंथ SIP स्टार्ट किया है, और एक कोटक स्टैंडर्ड मल्टी कैप फंड 5,000 रुपया पर मंथ SIP, और तीसरा एक लार्ज कैप फंड है, रिलायंस लार्ज कैप फंड है, उसमें है 4,000 रुपया पर मंथ SIP. टोटल 14,000 रुपीज पर मंथ हम SIP चालू किए हैं लास्ट मंथ से मैडम, नवंबर 2018 से. तो मैडम मेरा लॉन्ग टर्म होराइजन है आफ्टर 25 years. Can I expect 12% approx SIP? And I have want to earn 2.5 to 3 crores in 2043. My retirement is on 31st March 2043. And और एक सजेशन चाहिए था सर. Can I in तीनों, 2 मल्टी कैप है और एक लार्ज कैप जो मैंने बताया. Can I?
Got it. Harshvardhan Roongta, what is your advice to make him into a crorepati? Basically, that's what he's looking for. He's 35 years old. In 25 years, he wants to be a crorepati with more than 2 crores.
Yeah. So essentially speaking, if you look at the portfolio, he's 2 multi caps and 1 large cap, as he's rightly identified, with a 14,000 rupees every month. These 3 schemes are good and you can definitely continue, Shankar. So there is no doubt whether you need to change the schemes at this juncture. So changing the scheme is not in question. The idea is whether this 14,000 rupees per month invested over 25 years will become 2 crores or no. Well, I don't have the calculations done right now myself, but you know, in general perception, yes, this amount can multiply at a rate of more than 12% what you're looking at. That's what the kind of returns we look from equities over long term. So around 14 to 15% if you estimate, I'm sure you would be a crorepati for sure. How much, I'm not able to comment right now, but you will definitely cross the magical figure of 1 crore for sure. Now if you're estimating 12%, that's good. Getting 14% would always be welcome.
Shankar, all the very best. If you have any follow-up queries, you can write back to us, or even on Monday give us a call to understand more if you want. I believe we're getting another live caller, another viewer of ours. Samir is calling in from Nagpur. Hi Samir, good evening. How can we help you?
Good evening. My question is quite similar to Mr. Sen, but only thing is I want to do a fresh investment with a SIP of almost 10,000 per month for next 10 years. So can you just suggest some good couple of the mutual funds which I can start as a SIP?
Okay, so Samir, you're looking to invest 10,000 rupees a month for a period of 10 years. I recommend that you split this amount into 3 parts. About 25% of your money you should invest in passively managed index funds. So they're low on cost. There is, they have a well diversified portfolio of large cap companies, and any reduction in cost or a low cost investment will always be translate into a better efficient return for you. So one is a 25%, that is 2,500 rupees, can go into IDFC Nifty fund. You can invest another 25,000 rupees in a dedicated actively managed large cap fund. So right now we're looking at a passively managed large cap. You can choose an actively managed large cap. That could be the ICICI focused blue chip fund. The third option is a 5,000 rupees that you have that can go into a multi cap. So you would also take an advantage of the mid and a small cap segment doing well, and the fund manager cherry picking something out of that. So an SBI Magnum multi cap fund would be a fund from that category. So 3 schemes for you: 25% in actively managed, 25% in passively managed large cap, and a 50%, the balance 5,000 rupees in a multi cap fund.
Okay, I do hope that helps you out, Samir, and like I tell all the viewers, you can always come back on the Money Show with any follow-up queries. Either give us a call or write in to us. I believe our viewer Subhash from Mumbai is now dialing in. Hi Subhash, how can we help you?
I'm 71 years old, okay, and I have a very large corpus which I have basically split into 75% debt and 25% in equity. But I've been basically watching your show, and every time a lot of people say that you need to basically talk to an advisor. How do I basically find a good advisor, and where do I find him?
So well, Mr. Subhash, the first and the foremost and easiest format would be that I'm sure you would have some colleagues or friends or relatives who are accessing some information, or rather availing the services of a financial planner, and a reference would, I believe, would be the first step to go through somebody who's already been using somebody's services. Well, if not that, I mean, right now we are online. The entire internet has brought everybody across the country to each other. So you could search the work done by some financial planners in the industry. The work has been put up on the net, has been validated by a couple of different forums. So you could basically shortlist at least 4 or 5 out of that. And then the third and the final step would be each advisor and a financial planner would be different in their own set of thinking, and they would have different practice management theories. So what I recommend is that you interact with a financial planner whom you've shortlisted, and you need to make sure that you and your financial planner are on the same page in terms of how they approach the investment horizon. So with these kind of parameters, you would be able to find somebody, not necessarily if you shortlisted 4 people and you've spoken to somebody and that person is good himself, but he may not be matching with your thought processes. So you need to actually shortlist 4 or 5 people, talk to them, understand what is the practice management, whether your philosophy, your approach in life and the financial planner's approach in his practice management match. If that happens, you pick somebody. I don't think it's very difficult these days to find somebody credible in times of information explosion, especially online.
But is there some particular platform or something where you can go find them, or you just Google?
Well, Nandara, I mean, the kind of experts that are available in the industry are all, writing somewhere or, talking to investors through different mediums. So, the people who are actually practicing in this field and are serious and are doing some credible work are already known. It's only a matter of selecting that one person out of the, the lot that is available. So that is how you would start your research, would be obviously the kind of work that has been done by somebody. And I think Google and, some of these personal finance platforms already have the best people enlisted with them. So it's more important whether you get the right person who matches your thinking. So all the financial planners would be good. It's just about selecting that one person whom you find comfort with, who understands your thought processes and his practice management is aligned with what you are expecting. So selecting one out of that 5 or 500 is the more important factor. Searching for 5 people who are serious in this business or 500 people doing this business is not difficult in these times.
Right. Subhash, I don't know about Mumbai, but in Delhi and at least in the Punjabi families, it's all word of mouth. Somebody makes money, then the word spreads. That's at least how it works in New Delhi. But here's wishing you all the very best. And Harshvardhan, thanks as always for joining us here on the Money Show. Here's an open invitation to come back and be a Santa Claus. Also on Christmas Eve on Monday, the Money Show is going to be back at the same time. Many thanks.